people who have invested in the debt mutual funds, whenever they need the money back, they will likely not reinvest the money into it. So slowly the debt mutual funds ka asset under management will keep on going down.
My name is Arpit Arora. I'm India's leading personal finance expert and passive income coach, and I'm on that quest to change the middle class of India and transform their financial life in such a way that they are able to have the potential to follow their passion. They have the focus to follow their passion. They are not distracted by money because they're creating enough passive income, and most importantly, they're able to live with inner peace and joy. And that, my friends, happens by winning the game of money. That happens when you upgrade your financial IQ, and that most importantly happens when you are committed to achieve financial freedom in your life, because it cannot happen without a commitment. And it is my commitment to make sure you get all the support that you need to walk and achieve that destination.
A game changer. It's crazy. It is unbelievable because the Finance Bill 2023 has changed the rules of the game, how money was being made so far. And this is marginally unfair on you, to be honest, the way that I think about it. Because it got passed so fast. It got, after the budget, everyone was quite happy, because budget was very friendly towards investors. It was friendly towards taxpayers. But this thing that they have done, I'm not a big fan, to be honest. But they've really surely increases the revenue of the country, and I'm sure they will bring that money back in value for us. But for the investors, there's no good news, because the concept of long-term capital gain that there was on debt, which means any money lent to mutual funds or NCDs or bonds, we'll discuss in that category, in even precious metals and also international mutual funds, on all three categories, there is no long-term capital gain. Means आप कितने भी time के लिए invest कर लो, अभी तक था कि for 3 years if you invest it short term, more than 3 years long term. If you invest for 3 years, short-term capital gains tax, the short-term capital gains tax is as per your tax plan. Over 3 years means, which is what people wanted to do. They wanted to hold on to their investments for more than 3 years. The moment you do that, effective terms में आपको 10% के tax पे आते थे आप. It is actually called 20% after indexation, but if you take out indexation, you are in the region of 5 to 10%, likely 10% tax. Now, moving from 30% to 10%, because short-term capital gain is likely 30 in everyone's case, moving to 10% is 1/3. Now that benefit is gone. Not just on debt, but also precious metals and international mutual funds. Everyone was speaking about debt because it's a massive, like people invest in debt at least 5 times of what they invest in equity on an overall basis. If you look at the asset under management of debt versus asset under management of equity, easily 5 times का difference है दोनों में. So अब ये करने से क्या होगा? People who have invested in the debt mutual funds, whenever they need the money back, they will likely not reinvest the money into it. So slowly the debt mutual funds ka asset under management will keep on going down. What is the meaning of that? It simply means that if the asset under management of the debt, if it goes down, means that people will be investing somewhere else. So the question is, where will people be investing in? They will take this money out and put it into one of these two places. One, they could be investing into equity. Now, equity markets is volatile. It will make them more money as long as the investor is aligned to invest for long term. For people who are not aligned to invest for long term, they will put their money in the bank, which means the banking system will get more money. They'll have more liquidity. When they have more liquidity, this could, okay, I'm not saying this will happen or not, but this could ease the rate of interest a bit, because there is more money available to give out, which means the supply is more. When the supply is more, the interest rate they're going to charge, their ability to charge a higher interest rate could go down, possible. But amongst this comes an opportunity. अब opportunities में क्या मिलती है? there is a category called arbitrage funds. Arbitrage funds क्या होते हैं? These are those funds in which you invest for more than 1 year. It is considered as equity and you get long-term capital gain ka benefit on this, which is 10% of it in equities case. So arbitrage funds are not exactly debt products, they're equity products only. बट इसमें क्या होता है कि आप एक इंस्ट्रूमेंट खरीदते हो एक मार्केट में और दूसरी मार्केट में उसको सेल कर देते हो. वी हैव गॉन थ्रू आर्बिट्राज फंड्स इन द पास्ट. So I won't go into the exact detail exactly what it is. You can always refer to the past webinars when we discussed arbitrage funds. But this category could really come up. In this category, you will have the chance to invest for a year and after 1 year only pay 10% tax, which is better than waiting for 3 years and then paying 10% tax. But this might not have the same returns of debt, the surety, and also there is a possibility it can give you a loss as well. It is possible. Less probable, but possible. Now, another one that we haven't had enough clarity on is zero coupon NCDs or the maturity-based NCDs. Now, what we understand is because it hasn't been spoken about, although this is a debt-based investment, if you invest in this for more than 1 year, even then, because you're not getting any payout out of this. So if the bond price goes up by 10% every year, which is the interest rate of the bond, but it is not paid out to you, just the value of the bond keeps on going up by 10%. And you sell it after 1 year, then you again have to pay 10% tax. This is my understanding. This is something we have to have it verified with a few people to be able to say that 100% what I'm saying is going to be what it is. But the most attractive one, and something that I've been talking about for a very long time, you must have heard me at least say this 100 times. REITs and InvITs are the future, right? Heard me say that. I'm sure you have if you've been a old student. REIT and InvITs will get even more infusion of money because one, more REITs and InvITs are coming, and two, this is a blend between equity and debt, and three, they have reversed the tax rule on REITs and InvITs, something that they had introduced during the budget. So what it is, we'll talk about this in a minute. But let's talk about what effect does it have in the debt. So debt में क्या होता है कि now the investments that you will make, the Finance Bill 2023, what it is going to do effectively now is any investment that you make in MLDs, which is market linked debenture, or insurance where money is more than 5 lakh rupees invested in debt mutual funds, gold or silver, and international equity mutual funds. And all of this category, if you invest, then whatever gains you will make, irrespective of whatever time you invest for, आपको as per your income tax slab ही देना पड़ेगा. So if you're happily in the 0%, 5%, 10%, 20%, good for you. If you're in the 30% and above tax slab, then these investments will attract same tax as direct income, like you received a salary. So one smart thing, what's something a smart investor can do? Look, knowing this. Okay, so this is a question I want to ask you. I want to see, what would you do? If you're a smart investor, now that you know this is a scenario, how can you still pay less taxes on these investments? Is there a way? Think, is there a way through which if you invest in all of these, you still pay less than 30% tax? How can you do that? Well, the answer is simple. Anyone who is not in the 30% tax bracket, if they invest from their account and they book a profit in this, they will be taxed as per their tax slab. And as long as their gains are not increasing the tax slab altogether, for small investments made in those accounts where income tax is less, there you can still get the benefit. For example, let's say my father, okay, although this is not true, but let's assume that my father is in 0% tax slab, but he has a capital of 50 lakh rupees. Now he doesn't have any income. Okay. Under this assumption, when he invests into, let's say, gold or silver, and he put 50 lakh rupees, the gold silver becomes 55 lakhs and we sell it. We made 5 lakh rupees. On this 5 lakhs, now he has to pay tax as per his tax slab. Knowing that as per the new taxation, there is no tax up to that amount. He is totally free from paying any income tax to the government. That is how this can still be played, but in a very limited way, very, very limited way. So what are the other options? If this is not possible for you, what are the other options? What can you do? Let's discuss the pros and cons. The RBI floating rate bonds. Now, we saw that they are giving a return of 8.51%, which is pretty good. But the tenure is 10 years and the money is locked. It's liquid. It's illiquid. So this would only be suitable for someone who doesn't want to take any equity exposure, is in a low tax bracket, and doesn't want to withdraw the money. For them, it's a good investment. But that is a major constraint for a lot of people, because 10 years ke liye invest karna hai, so why should I compromise with 8.51%, that too fully taxable? I can easily invest in other asset class like equity and make double-digit returns and only pay 10% tax. So 8.5 pay, if you reduce by 30%, you've almost lost close to 3%. So your net return is, let's say, 5.5%. On the other end, if I invest in equity, I only make, let's say, 9%. On that 9%, I'm paying only 10% tax in long-term capital gains. My net return is still 8 plus. Here it is 5.5. So effectively, it's this particular option is for a very less people. The second option is a little better one, and that is senior citizen savings schemes. So senior citizen savings scheme gives you 8.2%. Tenure is maximum 8 years, minimum 5 years. So the liquidity happens after 5. If you want to exit, you can still take out your money. The good thing about this is that the amount is limited to 30 lakhs. There is at least a possibility to withdraw your money at an expense if you wish to. And also that here the returns, in this case, actually it is fixed. Unlike RBI floating rate bonds, because RBI floating rate bonds were also 7.5% at a time. With interest rates going up, the interest rate went up. With senior citizen, it is a fixed 8.2% unless it is adjusted. So the third, this is still better, I would say, because it gives you that liquidity and the cash flow comes every quarter. The third option, which most other people would be wondering, is debt mutual funds. Iske andar, if you look at the lowest category, which is one of the lowest category, which is liquid, which is 33 months of investment and 3 months or 90 days, or versus medium term funds, which go up to 5-6 years, you can withdraw out of this between 3 to 5 days whenever you like. The returns on liquid funds are typically about 7.5% right now. So it's better than what you would get in a savings account. But even FD returns are close to 7.5% right now. 9% is what you can make in medium term funds. But again, you'll have to check the quality. If you go for options like Bharat Bond, they're somewhere close to 7.7, 7.8%. So again, the returns are still, there is no big scope of making money. Another category which will open up for the ultra HNIs now is going to be tax-free quasi NCDs. अब ये कौन सी होती हैं? Like Rural Electrification Board, Power Finance Corp, NHAI, Indian Railway Financial Corporation. All of these government-owned AAA rated agencies, HUDCO हो गया. अब in sub में the returns you get as totally tax-free. The returns that they're giving right now is 5.5 to 6.5%. It's tax-free, which is effectively 8.5% to a taxpayer, approximately. The tenure of this could be as short as 3 months to as much as 5 years. Liquidity is again 2-3 days you can get your money because they can be sold in the market. Knowing all of this, my preference is still with NCDs, because right now the NCDs we're looking at, the well-researched ones, they're giving us from minimum 8.6, 8.7 se leke 13.5% returns. The tenure you can choose from 3 months to 5 years. Liquidity again 2 to 3 years. So net mein, if it is going to be taxable only, better get to go for NCDs. Smartly do this, invest from that account where the taxation is lowest, so that आप उसका advantage ले पा रहे हो. What most other people would be doing right now is investing in high interest FDs or 81 bonds. I'll tell you what they are in a minute. हाई इंटरेस्ट एफडीज में अगर आप मेजर बैंक में जाते हो तो अप टू 7.5% आपको एफडीज पे मिल रहा है. अगर आप स्मॉल फाइनेंस बैंक या कोऑपरेटिव बैंक में जाओगे तो आप अप टू 9.5% मिल रहा है. द क्वेश्चन इज शुड यू गो फॉर इट और नॉट. Let me explain. We already discussed that cooperative banks are losing their license. So I never want to put my money into a cooperative bank. I might put my money into a small finance bank, but only if it is very convenient for me, if it's a bank which is nearby, because small finance bank don't have their branches everywhere. That's one thing. Second is कि small finance bank में obviously functionality की limitations हमेशा होंगी. They don't have all services and features. However, if it's just a money that I have to park for emergencies, I can park up to 5 lakh rupees if I really want to. Up to 5 lakh rupees, I can put at 9.5%. This would be better than investing at other places because you have the safety of the bank, guarantee of the RBI, and a high interest rate. You can put per family member 5 lakh rupees in case you have if convenience is there and you have a bank nearby and you still want to avail that option. I personally go for the NCD option because returns are similar. I just literally find it a hassle to open so many accounts and then close so many accounts. So इसमें ना क्या होता है कि for one, it happened with IDFC. IDFC was giving 7% on savings not so long ago. Then they reduced it. Then Equitas came and they were doing that. Then they also reduced it. So you open these accounts. Practically, the challenge that I found was कि just for 5 lakh rupees at a 9%, 8%, you opening accounts and closing accounts for all family members is just too much hassle. I eventually found investing through my HUF into high interest bonds as a easier method. At least the time, effort, energy is saved.